What's going on, everybody? Welcome to the October mid-month report. I got my coffee here ready to go. I checked the market and it's got some interesting stats. Let's talk about it. So the market in October, it's only been 15 days. So the next 15 days can have a dramatic impact on the final numbers. But we always want to get a little beat on the market and just double check it so you can know what's going on from last month. So right now, with 15 days in, looks like the average sale price has taken a hit about 4 to 5%. I'll get you the final numbers in a moment here. Just gonna give you some highlights. Days on markets jumped over 30 days for the first time in years. I mean, I don't even remember the last time I saw 30 days on average market. But interestingly enough, though, failed sales has dropped through the floor, which is one of the most positive indicators I've seen. And the list price to sale price ratio is holding strong at 95%. And actually, right now it's at 0.4% to 95.4, I believe. Again, we'll get the exact numbers for you. But so you can see some stabilization, right? The list price to sale price ratio staying stable. The days on market's definitely creeping up. However, it's not going up at a dramatic clip. So we went from 28 to 32 days on average. So it's not crazy. It's just taking a month to sell houses now. The big one is that the failed sales has completely plummeted, which is really good to know. So now we're actually selling homes and they're not just coming to the market just to disappear off the market. And then the average sale price, the average sale price is down to about 750,000. But that's not too crazy because we still have another 15 days to go. Interest rate hikes are probably going to come in the next little future. So that is something to look out for. So that's high level. If that's all you wanted to know, I appreciate you jumping by. But if you want to stick with me, we want to go into details. Let's rock and roll. So what's going on? Well, the US government just released the CPI data down there in the States, and it dropped from 8.3% to 8.2%. That came above expectations. So the markets weren't too happy. And a lot of people aren't happy. And I can guarantee that the Federal Reserve is likely going to be pushing for an oversized rate hike again in the US, driving interest rates probably to close to 8%. For Canada, we're probably much going to follow suit. So our reading is going to be, let's just see here, October 19th. So on October 19th, put that in your calendar. We're going to be doing the Canadian inflationary report is going to be coming out that day. And inflation has been coming down pretty steadily so far in Canada. So if we do get another solid decrease reading down to maybe 6.8%, I'm not exactly sure what the expectations are, but if we have another meaningful decrease in inflation, maybe our bank won't be so aggressive in raising interest rates. What I've been hearing from Bloomberg and all other sources I'm checking is that Canada is expected to do at least a 50 basis point hike. So what does that mean? Well, let's get into the interest rates. I'm going to share my screen. I can show you what that means instead of just telling you. The inflationary report is going to be coming October 19th. And let's talk about the interest rates. So if the federal government, the Canadian government, Bank of Canada, raises interest rates again, 50 basis points, your variable rate automatically is going to jump another 50 basis points. So we're going to be looking at 4.9% on a variable, and that's for an insured mortgage, and an uninsured mortgage will be even higher. What's an uninsured versus insured mortgage? Uninsured mortgage is if you have 20% down or plus, you don't need CMHC insurance, Genworth insurance. And then if you have less than 20% down, you usually have to pay an insurance premium, but banks usually offer you a better rate for the insured products. So it could wash out, but you have to do the math on that, and we can definitely help you do that when you're analyzing your purchasing scenarios. Okay, so that's what's going to happen if the bank raises rates. Your variable rate's going to jump up. So just be prepared for that if you're on a variable. And fixed rates took a little bit of a jump, 20 basis points since the last time we checked in end of October. However, only 10 basis points up from the midpoint in September. And the reason that is because the bond yields have shot up. Inflation, like I said, in the US missed its target. So usually people flood to safe haven investments like bonds, and that usually drives up the yield rates. And I could pull that up for you, but I do that more in the monthly reports. So that's just something good to know that the bond market pushed up a bit, and that's why you can see that your fixed rate has gone up as well. Okay, so let's get into the rest of the real estate market and kind of go over the interesting statistics that happen here. So what's currently on the market? So last time I did a market report, I said there was probably going to be 233 units on the market in 30 days. And currently we're sitting at 239. So the prediction is pretty accurate. The inflow is less than the outflow. And essentially we're just losing inventory. And that's typical at this time of the year. But just to show you what's going on here, usually our typical 5-year average is 245, and we're right at 239. So we're right on mark, pretty stable. Inventory has been coming down and settling down. All our asset classes mixes are right on schedule, right with the five-year average. The only one that's a bit low is the semi-detached market. And then looking at the inventory rate here, you can see that we had a dramatic spike after the inflationary reports were coming in. Essentially, big inflationary readings were coming in. That's when really things started changing. Interest rates started happening here. Inventory shot up, peaked out in August. Now you can see a sharp decline, and we're right back at our 5-year average. So things are settled back down in the inventory level. The nice thing is buyers have options. That's great news. That hasn't been obviously the case, because as you can see, the inventory in 2021 was very suppressed. Okay, let's keep going. Let's take a look at the inflow. So how much supply are we getting to the marketplace right now? Right now in October, we had 82 units coming into the market. So that's only 5.9 homes coming in a day. Today's October 15th, as you can see down here. So I only really am tracking on a 14-day math here because I don't think enough data is coming today. So I'm just tracking this based on yesterday. So 5.9 homes are coming to the market a day. That's about 23% lower than our 5-year average, and only 11% lower than last year. But yeah, definitely still a lot less inventory coming in than typical. And that's been a trend for a while here. As you can see, the gray line here is our 5-year average of inflow. In 2021, which is the yellow orange line here, sorry, you can see that inflow started actually dipping below the 5-year average here. And then again here in 2022, the inflow is now starting to dip. And this is obviously not the end of the month, so that's why it's so low here. But you can see that inventory is starting to trail down. Sorry, the supply coming to the market is starting to trail down underneath the 5-year average. Perfect. Looking at outflow, so how many listings are selling a day? Right now in the month of October, we have had 69 units selling. 69 units selling is just 1 second here. Okay, so like I said, we have 69 units that have sold so far in the month of October. So that's 4.9 homes a day. Again, we're about 24% lower than usual. And as you can see here in the chart here, this is our 5-year average, this is the gray line. In 2021, we were always above that gray line, and we just dipped once below in August, and then we were pretty much square or a little bit above the 5-year average. And in 2022, you can see that absolutely the amount of sales that are happening are completely lower than it was for our 5-year average. There's not been 1 month since May that we've even touched the 5-year average. So, there's a lot less homes going around, a lot less homes selling. At least the homes are picking back up pace though. So for example, here's April. This is the last month that the market went up. And then after April, the market dramatically started dropping. And then we kind of peaked out in July, August. And then now sales have started picking back up, and we're kind of flatlining around this 4.8, 4.9 homes a day. So we're probably expecting another 144 units selling in the month of October. Failed sales, though, this is the spark of hope that we got right now, down 56%. So 56% less failed homes sold. We really peaked out here again in June, 5.5 homes failed to sell a day, which is 166 homes. And right now we're only at 29. Just look at that, fell right off a cliff, which is amazing to see. So the people that are on the market right now are probably serious sellers. And the people coming to the market aren't just trying to test some lofty price. So I think a lot of these fake sellers that I was talking about earlier in the year are now kind of evaporated. They know that if you want to sell in this market, you got to position yourself properly. So that's really great to see that's happening. List price is still the days on market, as I said, is up to 32 days. So a 54% increase since July. And the list price to sale price ratio is stable at 95%. So, obviously came down from its highs, dipped all the way down to 93% and now back to 95. So we've been really hovering around this 94, 95% for 3 months now. And then here's the average sale price. Right now we're sitting at 750,000. Where I thought the bottom was going to be was at 764. We jumped up 2.73% in September. And now we're down 4.53. This is potentially going to jump back up at the end of the month once some more sales come in. However, the sales could be lower and this can go even further down. So that's just interesting to know where exactly where we are. So we hit the bottom, jumped up a little bit, and now some more bad news came out. Interest rates are probably going to go up, and now it looks like the market's adjusting down a little bit again. And where are the gains? Let's talk about the gains. Well, we had some massive gains from January 2020 to January 2021. The market jumped almost $200,000. And then again, it jumped over $200,000 from January 2021 to 2022. So there was just massive, massive growth in the market here, and not unsustainable growth. And now if you look at the gains right here, we're currently sitting at 750,000, which is back in line with prices back all the way in March of 2021. So we've really lost all of the gains this year. And actually I've gone backwards another 6 months almost. So it looks like, we're back to March 2021 prices with our current average sale price here. So interesting to see that, the gains are gone this year. The real estate market has definitely corrected. And now we pretty much lost all the gains this year and lost the gains from last year as well, because here was that nice little spike up in October as well for anyone that was there. So if the average sale price holds 750 for the rest of the year, we're going to be on negative year over year over these months. The average sale price for the year, which takes all the data into consideration, will still probably be up. But I strongly believe that this year over year data now is going to be pretty telling. I think if you bought last year, if you bought at the beginning of this year, you're going to be you're going to be a bit underwater for a little bit here. Like I said, when is the rebound coming? Well, if we looked at 2017, here was the bottom of 2017, and it took 34 months to recover. So as long as you're looking at living in that home for at least 3 years, you should recover your capital. And then if you wait longer than that, you should see your appreciation again. Okay, hopefully this information is helpful. It's all about how you position yourself in the marketplace. You can still have a lot of success. And if you bought a couple of years ago, you're still doing really well. Okay, perfect. And just to wrap up this one here today, I won't go too deep into anything. Just want to go into the comparison report and just remind people of the average trend that usually plays out at this time of the year. So for example, at the end of every year, since I've been tracking this, as you can see, the last 3 months, there's always a significant more outflow than there is inflow. So, if you are in the market looking to get something, if you do believe that the real estate prices have stopped declining, then now would be a good time to pick up something because you got some serious sellers in the marketplace. And if you're a seller looking to position yourself to win, definitely give us a call. We'll be happy to help you. All right. I hope you enjoyed this. And if you have any questions, feel free to reach out to us. Thanks. Bye.